What does arcade games and window cleaning have to do with Ryan Holmes' new venture fund? A lot, actually. Hello and welcome to another episode of the BetaKit Podcast. I am Douglas Saltis, Editor-in-Chief of BetaKit, and my co-host, as always, is Rob Kennedy. Today on our podcast, we have Ryan Holmes. And the last time I saw Ryan Holmes in person was a lifetime ago. It was September 2019, and we were on the main stage at Elevate Tech Fest talking about lessons in leadership from running large companies, making time for his newborn daughter, and whether or not he was planning to stay on as Hootsuite CEO, which was going through a rocky patch. At the time, he told me there were no imminent plans. Fast forward 2 months later, Holmes was no longer the CEO of the company that he had founded 11 years prior. Now, a lot has changed since then. Holmes has 2 daughters now, which you will hear a bit from on this podcast, and a new fund, LOI Venture, tied to his League of Innovators charity. LOI is focused on developing young entrepreneurs, and the fund is his and New Avenue Capital's Manny Pata bet that the kids are all right. Holmes' interest in youth entrepreneurship started at an early age, and we get into why on this podcast. But we also trace how much has changed since Holmes' transition from hustling quarters to head Hootsuite honcho to institutional VC excited about Web3. It's as much a conversation about how much the Canadian tech ecosystem has changed as it is how much he has. So let's check in with Ryan Holmes and his next act. Ryan, thank you for joining us today. I guess where I wanted to start was having you explain why you don't like old people. What do you got against old people?
I have nothing against old people. Every day I'm becoming older and older. So the whole purpose behind League of Innovators, the charity, and our new League of Innovators Venture Fund is to just help young people because they also have problems with things like getting credit and getting funded. That's really been the mission. I was a young entrepreneur. I talked to other entrepreneurs that were young entrepreneurs, and it's so important to help them out, I believe.
I was going to maybe ask you some more questions about the relationships between LOI, but let's dig into that right now as it relates to just like your interest in this, because it's not just League of Innovators. It's also some of the work that you've done before with the next big thing and things like that. Like, how do you come to care or have interest or commitment to youth entrepreneurship? What is your personal relationship to that?
I guess personally, I started my first business. Well, it was really a window washing business in elementary school. My mom was an entrepreneur and I was begging her for some coins to go play video games, which is going to date me. But
No, it won't, because the people who don't remember that will have no idea what you just said and it'll go right past them.
Yeah. If you don't know what I'm talking about, apply for my fund. So basically, she said, well, I'm not going to give them to you, but if you want to earn them, here's a squeegee and a bucket and you can clean the windows at my store. And so I squeegeed the windows and then she told me, hey, go hit up my next door neighbor and see if they want to do it. And so lo and behold, I started a little window washing business.
Immediately revenue positive.
Yeah, exactly. Had to pay back that squeegee capex, but immediately after that I started a paintball company and did that all through high school, which was an amazing high school project. After that, I did a restaurant. After that, I did an agency, founded out about 7 or 8 different businesses within the agency, and then founded Hootsuite. So really, first business was when I was 16, had my big out of the park at 36. So there's a 20-year gap there. But the thinking is we need more big out of the park innovation. We need it to happen earlier in people's careers. And there's a huge upside for the entrepreneur. And I think also society, if we're able to launch more big, successful businesses at an earlier stage and more rapidly, that helps everybody. I think prosperity is a big, benefit to society.
I just want to touch on that last point for a second here, because, oftentimes ecosystems compare themselves to the valley. Is there something to that about sort of creating this innovation ecosystem and bedrock upon which rather than being like natural resource based, we've got like an innovation based economy. Is that part of it?
Yeah, no, I think that thematically we're seeing a trend of decentralization of San Francisco right now. This has been happening for years, and I've been talking about maple syrup mafia, and people have been talking about Silicon North and et cetera, et cetera. There's not going to be one region, I think, that captures it all, but I think that there's an opportunity for a lot of regions to capture a lot more of that. It is one of the biggest travesties that we educate so many Canadians in our great education system. They reap the benefits of our medical system, get right to the point where they're about to be contributing taxpayers, and then they peace out and go, work at a startup in Silicon Valley. Like, shame on us. Why did people go south, or why historically did they go south? Capital was there, network was there, and it just ultimately was easier and they had better outcomes. So I don't expect anybody to take a sacrifice like that, but let's level the playing field and try to make it as equitable as possible so that we retain a lot of these. And these are a lot of our best and brightest people, which is the compounding tragedy here. Like, we're losing some amazing minds south of the border. Thematically, there's a lot of good things that are I think, slowing that down right now. We're seeing some really interesting innovation centers organically pop up around Web3, AI, Meta, etc. in Canada. And that's super exciting.
Okay. I think we maybe can dig into more of the ecosystem impacts, or maybe the space that you're playing in now as you've transitioned from squeegeepreneur to CEO of Hootsuite to now being a VC. But I want to even just go back and just lay out for people who aren't familiar with League of Innovators, like what the programming looks like and what some of that training looks like, because we're kind of timing this around LOI Venture kind of closing funding for the fund that's associated with this additional programming. Like what happens when these kids get started with LOI? Like, are you giving them like day one squeegees and being like, okay, here's what you're going to do? What are the services and programming look like at this stage for entrepreneurs who maybe if they haven't been getting those support systems, they're certainly more familiar with the concept of startups and entrepreneurship than, say, we were in our youths?
It's, I think it's the most exciting time there's ever been to be an entrepreneur. There is so much disruption happening right now. So it's really two-part. League of Innovators, the charity, is about 5 years old. It, again, is just trying to solve this problem of how we identify and accelerate young entrepreneurs. And it's a national charity across Canada. The people that the young entrepreneurs that we've been able to attract into the program have been mind-blowing. Some of the best and brightest entrepreneurs in Canada, really flattered that they have come in and invested with us and spent their time. It's a purely charitable program. We run programming for the entrepreneurs that at the kind of beginning starts with higher volume, low touch. So things like webinars, things like online courseware to help get them wrap their head around entrepreneurship. And that's a little bit of filtration process. So sometimes people don't know if entrepreneurship is the right thing for them. And so they can get in and kind of try it on for size and see, like, do I like this or does this scare me and I'm out?
Like Space Camp, just wasn't for me.
Yeah, exactly. So we get them in on that. Then we kind of filter and find out who kind of wants to go to the next level, who wants to go to the next level, who wants to go to the next level. Through the programming, we do about 5,000 touch points with entrepreneurs across Canada per year. At the kind of highest graduation levels, we have about 50 entrepreneurs that go through our Labs and Boost programming. When we look at over the last 5 years, the kind of impact that has happened, we measure the valuation of the companies that gone through the program. It's approaching $1 billion. And the entrepreneurs did this. This is all them. Like, we helped in some regards, but.
Okay. So I think maybe to follow up on that, was the launch of the fund something that was a planned stage 2 approach to expanding this? Or was it prompted by you having a bunch of graduates who had started launching companies and they were looking around for some checks? Like, did you kind of create your own demand for this?
It's a little of both. The impact that we've created through the charity, I'm super proud. And as I say, I think there's a ton of prosperity that's being created there. We also looked at it and how can we further help the entrepreneurs? They go through the program and they're looking for capital to go and build out what they need to do. So we put together the fund. We announced our first close. So we've closed 50% of the fund. It's a 20 million Canadian fund. And really what we're doing with it is investing in these young entrepreneurs, helping be the first check in many cases. And that's it. You know how great it is to get that first check in. You can go and socialize that with other investors. We're also bringing in as LPs into the fund, limited partners into the fund, some of the most amazing entrepreneurs in Canada, investors and operators. And we hope to make it just a lot easier for them so that they can focus on building their business, not fundraising.
Is there anything you're doing specifically around structuring the deals that are targeted to size of the fund or stage or being that first check-in, or maybe more like stage of the entrepreneurs or like learning development? Did you raise almost kind of like a super angel fund here? You know, we can go through the list of some of the LPs. Are you capping yourself out in terms of stage of investment, things like that? I'm just super interested in how you look at programmatizing investment for the types of companies and the types of individuals and entrepreneurs you're looking to service.
The format's pretty simple because we have this great funnel of entrepreneurs coming through the charity, and we don't have to spend a lot of cycles on outbound discovery of entrepreneurs. You know, we kind of are looking at the ones that come through and unfortunately writing a check into a percentage, not all of them, but into a percentage of them that we feel like have the best chances of success. And in terms of the stage and size, we're doing two rounds of financing. We're going to do a seed and pre-seed. We're going to do 90 pre-seed investments of $100,000. So that gets us to about 9 million. And we're going to do 30 follow-ons at 300,000. So that'll get us to our next, kind of 9 million to close out the round. We're able to see traction because prior to investing, we've usually had a good relationship with the entrepreneur, make that first investment, see how they perform and grow based off of that. And then look at that second investment to help, accelerate what they're doing.
Given the age group, that the bracket that you're targeting, it's sort of like end of high school into university kind of college years. And I am assuming you're not doing the Peter Thiel, screw university, do my thing. Like that's not your worldview. How do you juxtapose? Are they like, I'm doing university, I'm trying entrepreneurship? Is it a choice, like a binary choice? Is that how they're thinking about it? Or how do you find that it's been working?
Yeah, so the age bracket is 17 to 30. So we were doing 17 to 25. We increased it a little bit, and we're really happy with the aperture at this point. I'm a university dropout, and one of the first things I tell people is, it's a very personal decision, and I never push that on anybody because it's got to be completely their decision. I that's kind of why we start the programming with this kind of test the waters. Is this the right thing for me? And let people discover if entrepreneurship is going to be something that interests them or something that scares the hell out of them and they want to just go and finish their degree or finish whatever they're doing. But, the reality is a lot of programs, you go through a 4-year program and you're out, and then what do you do then? And, we're happy to reconnect with the entrepreneur at that point. I always talk about the benefits of having some technical hard skills. It can be really beneficial when you get into an industry, work there for a couple of years and discover where the holes are, where the problems are and frustrations. Our goal is to kind of help couple the hard skills often with this entrepreneurial mindset in terms of how they can approach problems.
The Beta Kit Podcast is brought to you by our presenting sponsor, the University of Toronto. Did you know that U of T is the place where innovation meets impact? Drawing on an incredible range of research areas, U of T entrepreneurs have secured more than $2 billion, that's with a B, in investment and created more than 600 venture-funded startups over the past decade. These innovators are pushing the boundaries of what's possible, powering breakthroughs in biotech, creating solutions for climate change, and transforming industries through AI. Get to know the U of T startups taking on today's biggest challenges by visiting entrepreneurs.utoronto.ca. That is entrepreneurs.utoronto.ca. The Beta Kit Podcast is also brought to you by Venture for Canada, a national charity that fosters entrepreneurial skills and mindset in young Canadians, which is hosting its first annual All Things People conference from March 24th to the 25th. This virtual event is designed to help small to medium-sized businesses, HR specialists, and anyone interested in scaling diversity and belonging to put the people in people operations. The All Things People conference brings VFC's vast network together to openly and candidly chat about practical and system-shifting steps Canadian startups and innovators must take to make the most of lessons learned from this moment. Head over to www.ventureforcanada.ca/conference to learn more and get your tickets today. But wait! We're offering you a special discount code to secure your tickets today. Use BetaKit10 to get 10% off now and see what happens when startups put people first. I think one of the most interesting things for me in catching up with you since the launch is maybe how your perspective has changed on things now that you are switching to the other side of the table and being the investor. And I would say like probably a more formal institutionalized way. So have you caught yourself doing things as a VC you used to hate VCs doing when you were a founder? How much has that dynamic changed? Because I think we see, and we can see from your LPs, there are a lot of either exited founders or experienced founders or operators who are trying to cultivate the ecosystem by putting small checks in other entrepreneurs. This is this is a little bit more formalized than that. You're a legit VC. Has that changed the way you're talking to companies, what you're looking for, what resonates with you, entrepreneur to entrepreneur?
Well, yeah, maybe I'll step back a little bit on that and think about 2008 when I was raising for Hootsuite. It was a challenging time. The ecosystem in at least Vancouver, I think in Canada in general, was pretty thin in terms of exits, which result in limited partners, which results in investment back. It's a virtuous cycle, right? So you can't just think about an investment ecosystem without successful exits and successful limited partners. I think at that point it was thin. I ended up going south of the border, ended up doing a price round with preference on it, and ultimately a deal that would be laughed out of a room today in the in the founder world.
Let's get specific on that, because this is something I've been talking to a lot with VCs more, but when they're seeing the news because things have exploded, you're not talking about the valuation or the amount of money raised. You're talking about all the other terms and conditions on the money that you raise that might be a little bit better for the investor than the founder in those considerations, right?
Yes, yeah, exactly. This was pre-safe notes, right? I think the thing was that the deal, it was fine per se, but the metrics of the business at that point, given today's market, we ended up closing at a 5-6 post valuation. At the time, high fives, right? Today would probably have been a 60 million post valuation, right? Because of the metrics the company had. We had 1 million users and like the momentum was absolutely
This was
incredible.
kind of like post the South by explosion.
It was actually a little bit pre, and then the South by, it just went vertical after that because of some of the guerrilla marketing we did there. I guess getting back to your question, the LPs I have in, how I'm thinking about this personally. First off, I've been angel investing for over 10 years. I love angel investing. I love investing in people. I want to make sure whatever we're doing through the fund, we're creating, everybody wins out of it. I don't want to create one-sided deals because I don't think that is to our benefit at the end of the day to create one-sided deals. We're doing some things that I think are helpful for the entrepreneurs. We're not taking a board seat. We're not setting terms. Both of those, I think, can be really beneficial. We want to be aligned with the entrepreneurs. And board seats, in my experience, especially at the early stage, having a venture group on your board, they're there for the most part to protect their interests and watch for downside risk. And the financial people, they very rarely have been operators. So our goal, if a founder wants to build out a board, is to get them an ex-operator or somebody that has been there, walked the path before, that can really help them connect the dots and execute versus a spreadsheet individual.
Okay. And I was assuming keeping it really easy, if you're the first kind of check in and that point of validation for those follow-on investors to be comfortable having you beside them because they're not worried about a turf war or control issues or things like that. It's very easy for them to slide in after you've given some validation to the company to participate in growth.
Yeah, I think that is helpful. We always, to partners that are looking to come in, they're grown ups. They need to do their own diligence and get there. But I think the fact that we will, for the most part, have a long track record with the entrepreneur gives them some comfort as well. So they know how the person's executing. We can give them some color on that.
So are there things that you, taking the other side of this coin, that you appreciate now more from the VC perspective now that you're a VC? Like, obviously you're working to support, I don't think you're really hustling Jason Calacanising to get into deals first to be the winner here. You're more looking to support people in their journey and attack a segment of entrepreneurs that need that support. But it struck me earlier talking about, it's not like this funding is guaranteed for every entrepreneur or startup that comes through your charitable program. Is it been a lot harder to say no to those people that you've kind of brought up and say, at this stage, we don't believe in the future of your company enough to put in a check?
Well, the fund is new venture, so we haven't had a lot of those conversations yet. But what we are being for entrepreneurs in the program is really transparent in terms of what we're looking for in terms of them as entrepreneurs, but also metrics in terms of the growth of their startup and their concept. So things like markets that we're looking for, scale, etc. We want to be very transparent with them. The program has this element where we see a lot of people that are interested in CSR in terms of diversity and inclusion, and that is like, we're really supportive and find these programs interesting, but unless there is a revenue model associated with what they're doing, we're not going to make investments in. We're at the end of the day also beholden to our LPs to make sure that we have a great returning fund, and they have big belief in terms of historical companies that have gone through the program that will be able to achieve that. I will say, to your question on now I'm on this side of the table, you hear a lot of VCs saying, we're making a bet on you, founder. I kind of thought, oh, that's a cute thing to say or whatever else. But the reality is, as a VC, you really are making bets on people, especially at this stage, on their ability to execute and their tenacity, right? Being the person with the bag, you're just providing money, which is kind of ubiquitous. There's capital everywhere, and you're helping the founder connect with that and to go and chase their dreams. But at the end of the day, as an investor, I'm doing a terrible job if I'm not making investments. And I do talk with founders about the psychology of this when they go out and fundraise. You're actually helping a VC by taking money from them. And a lot of founders don't think about it that way. They think that the VC is doing them the favor by making the investment. It goes both ways, right? And as a VC, you've got to have a place to put your capital and make your investments. And that being on this side of the table, those are a couple of things that I see a bit more.
Is it also weird that not only the 2008 example you gave with Hootsuite, not only was it a difficult venture space in Canada specifically, but if people don't remember, the world was ending then because the market was crashing, and that's all the American housing stuff. And it almost seems to me like the money thing is the thing that's ubiquitous, and people writing checks to entrepreneurs. There's not enough entrepreneurs. There's too many investors. And is your value prop like, dude, these are people who've run companies before. We understand, like, we are ex-operators in the most legit sense, and we're showing that in terms. Is that how you're trying to differentiate yourself from other investors?
So I also am a limited partner in other funds that are making investment. And if you're going to start a fund in this day and age, you have to have competitive advantage. When I look at what we're doing, I think we've got an incredible differentiator, and all the folks that are investing with us believe so also. And that is that this focus on youth and this focus on early stage. I want to say we almost have a proprietary deal flow where investments are coming to us, and that's pretty exciting to be able to be front row seats on all of these amazing Canadian young entrepreneurs. It is a challenging market, and I think you're right. Like, capital is ubiquitous. I think the talent is the scarce thing, and the great execution is the scarce thing. We're seeing larger funds that used to be public only going late stage guys going Series A guys going pre. So
we're seeing Series A1, Series A2 now. The world obviously doesn't make sense anymore, but within the strict regiment of like funding rounds, it seems like nothing makes sense anymore.
But I would temper it also and say that the rewards are also really high, right? So if you look at companies that are IPOing and going public, we live in a prosperous times, knock on wood. I think innovation, we're on this exponential curve of innovation, and things are coming faster and faster. Wealth is getting created faster and faster. Web3, the things that you can do with no code, with decentralized finance, these are like Legos now, and you're able to just chip together Legos and create something of huge value in a record amount of time. So it does warrant the increase in valuation we're seeing and the velocity we're seeing.
Yeah, software is a commodity. Just on the point you made earlier, do you think part of your differentiator is legitimate focus on diversity? Because you talked about the societal impact. Maybe it's worth expounding on that just a little bit more, because it's not just about pure capital, or is it just about pure capital? It sounds like it's not.
Look, first off, I look at the top of the funnel for the program. In the charity side, the diversity in attendees in our programming, we do a diversity report that comes out every year with League of Innovators charity. You can grab it off the website. Talks about where people are coming from, the background, age, all these different cuts. And I think we're doing a good job. We can always do better, but I think we're incredibly well represented in comparison to other programs. And then that cascades through the management team on the charity. We have a very diverse management team on the venture fund. We have a very diverse management fund, group in the management fund and the venture fund. And also in terms of the limited partners and advisors that are joining us. So we are working with that. Now, in terms of the checks that get written, we believe that, if we don't have a diverse kind of top of funnel, we don't have diverse entrants into the charity, there's no way we're going to have diverse checks written at the bottom. We are looking to think about how we level the playing field in every way. And the reality is, though, we get back to our criteria, the framework that we're putting forth for investment. We're being pretty clear and transparent with everybody that is in the program, what our criteria are, what we're looking for. And so it's really up to them to go and chase those criteria if they really are hell-bent on getting a check from us.
You mentioned before that you're also at an LP and other funds. Is there any work that you're doing connecting with like-minded organizations and things like that? And because I know at least there's some intersection here with, if not other dedicated funds, we're seeing kind of the rise of the micro fund or impact specific or thesis specific fund, or these, we just covered Roach Capital or Backbone Angels and things like that seem to have like-minded interests, if not agendas. Given where you're positioned in terms of the amount of capital you're trying to deploy, is there interest to maybe also be the advocate at the VC level for what the actual seed round check is going to be, or that A check? And I know this is early because you guys just deployed, you've only invested in like maybe 2 or 3 companies, but at some point you're going to, in the same way that you launched a fund to support companies you're putting through the funnel, have to start thinking about where they get their next checks and things like that. Are you doing any work there to connect them to follow on or to other organizations?
Yeah, I mean, we've had an incredible number of funds that we've talked to across the country, into the US, that would love to look at our portfolio as it matures. It's something that I think we're going to institutionalize, like how we help the founders get that next round really quickly, help them continue to execute their business, because I know how distracting and slow fundraising can be. It slows you down as a leader. It slows down your go-to-market. It slows down everything. And so if we can just kind of keep that velocity going for the entrepreneurs, I think that's going to help everybody. Everybody's looking earlier stage, and as early stage as you can get in a lot of cases. So we have a great opportunity to introduce our founders to the right people.
Do you feel more confident that they're going to have an easier time than you did? I know we just talked about like the valuational difference and even just capital being available in Canada, but I also know that like at that follow-on stage, it's a very different game. Like Omer's isn't the only game in town right now, but there's a lot of different games in town, and there are new entrants. There are just interesting things like Tiger Global being in everything, everywhere at all times. They're deploying capital into this podcast right now. Is that just more optionality, which leads to better decisions, or is it a bigger mess that these young entrepreneurs have to navigate now?
I think about it more importantly in terms of velocity than dilution. When you get 9-figure, 8-figure, or 9-figure, 10-figure outcomes, whether you're diluted 5% plus or minus, it's kind of moot, right? So really the thing that I think is more important is that velocity. That's where people get ahead of you. you lose market share, and your growth can slow or stagnate, and that is more important on your valuation than kind of cap table dynamics.
The last time that I don't know if this counts as talking in person, but it's close as anyone's really gotten in like the last 2 years. But the last time that you and I talked in person, it was 2019. It was at Elevate, and we were talking on stage about a bunch of different things, but two things from that conversation stand out to me. One, I think you had just become a father, and you were talking about how you were looking to, I don't know, you were entering a transition of change, right? Looking to spend more time with your family. And then we had talked about possibly a transition at Hootsuite, then ultimately ended up happening. You're also at that same time saying it's never been a more exciting time to be an entrepreneur, and talking about a lot of Web3 stuff. So I'm wondering, have you kind of decompressed from your Hootsuite journey now? How are you looking at that experience? Are you like, I just want to be here with my daughter when she's making dinner, and then I want to cut checks for young entrepreneurs? Are you looking to get back in the game with something new? How are you just thinking about your next act after like a period of so much change?
Yeah, well, I would say that the 12 years that I founded and led Hootsuite was an absolutely incredible journey. About a year and a half ago, I did a search and brought on my successor CEO. So I'm really grateful for him. His name's Tom Kaiser. He's really stepped up and has been doing a lot in probably a pretty challenging couple of years with all of the things that we've seen with COVID and changes in the world and all that. So
the continuous merry-go-round of the Canadian IPO window opening and closing every month.
All of these things, yes. So personally, I think it was great timing. I spent 12 years, which in a startup land is 3-4 year tours of duty.
Yeah,
that's everybody's options vest over 4
three
years.
startups worth of startup.
3 startups worth of a company. And as I eyed up that fourth tour of duty, you mentioned new daughter. I've got a second daughter, so I've got an 8-month and a 3-year-old now. And I wanted to just really enjoy that and spend time with them through that. That said, we've been talking a lot about the fund, and spun up the fund and spending time with the League of Innovators, the charity. And I think that it's so rewarding for me to be able to help young entrepreneurs. That's kind of my, for this stage that I'm in, is just thinking about like how I can create legacy and scale on impact. And if I can help be a part of having 10 more Hootsuites within Canada, that's a pretty cool legacy. So I'd love to see that happen. And that gives me, a lot of gratification. I'm curious on Web3. It's exciting. I don't see an operator role for me in the near future, but I'll probably work on incubating some concepts, get a CEO on those, and help give them some thoughts and guidance and scaling up those ideas.
Like old school Invoker style, like.
Perhaps, yeah, exactly. There's, so many cool problems to solve right now, and I know what a big push it is getting a startup going and out the door. But I think that's gonna keep me well occupied for the next few years until the girls go to school.
Okay, well, let's put it this way: if you decide to launch a Web3 startup, let's please have you announce it when you come back on this podcast. Okay,
I'd be more than happy to.
The BetaKit podcast is produced by BetaKit Incorporated. It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.